Order blocks, breaker blocks, fair value gaps, 2022 mentorship, 2016 core content, silver bullets, reapers, turtle soups. Let's be honest, if you want to get into trading and learn ICT concepts, it can be extremely overwhelming. But I'm here to make things simple for you. If you're new to the channel and don't know me, my name's Kyle, and I'm a full-time day trader who's made over $1 million trading ICT concepts. If you want full proof of my payouts, make sure you check out the link in the description. The problem with learning ICT nowadays is there's so much information that it's easy to get lost in the technical jargon and complex theories without first understanding the basics. And the truth is, you really only need the basics to have a better read on the markets. In this video, I'm going to cut through all the fluff so you can get right to work on improving your technical edge. So go ahead and grab a notebook and let's get started. Alright, so this video is going to be a simplified guide to ICT. Now, I know that maybe some of you guys are already too deep in the rabbit hole, at which point you can't be saved. But if you're trying to restart from the beginning, or if you're just getting into ICT concepts, this is, in my opinion, some of the most essential concepts to learn before we even dive into some of the more complex models or theories. But just as a visual representation, this is where most ICT traders get stuck, is the start, and they never actually get to the point where they start executing in the markets where they can start improving the trading and actually see that growth curve. So basically, this is a representation of people that are just stuck in the loop of education. They think that more and more knowledge and more concepts that they add to their system is going to improve the trading, when really they don't even have a grasp of the basics. And this is what this video is going to be focused on for people that are just getting into trading, or people that are struggling with just some of the basics and they can't kind of get their foothold in the markets, or they just are pretty much running in place. Now, I will say that for the first 4 to 6 years of my trading career, this is where I was. I was kind of searching for the Holy Grail for 4 to 6 years, and this was back in 2011. I've been trading since 2011, and if you guys don't know much about what trading was like back then, we didn't have YouTube. I mean, YouTube was around, right? But there wasn't a lot of content creators, or barely any content creators, uploading trading education to the YouTube platform. So I was stuck on text-based, forum-based online platforms to try and learn, which, if you can just think about the stream of information that you're getting, it's extremely slow. So by the time I saw somebody post their analysis, it could have been 4 to 6 hours later. I was trying to hop on that same idea, and the move might have already, moved away from that level. Or there wasn't as much credibility in the space. You couldn't really vet out which user was actually profitable versus another. Because when you're looking at a forum, right, you just assume that the people with the most posts have the most credibility, and that's really not the case. So, I got stuck in this learning loophole for a very long time, and I think the problem with ICT concepts is that there's so much information out there that people don't really know where to start and where to stop. Like, when do I stop trying to find the next thing to add to my system when I can't even stick to one thing and study that thoroughly? Okay, so this is basically, the structure of this video is outlining a proper study plan, proper concepts to focus on before you dive into the other things. Because if you don't understand these concepts that I'm about to outline, it doesn't matter how much more studying, how many more concepts you're going to get into. Quarterly theory, reapers, fair value gaps, breakers. If you can't even understand the premise behind the market, there's no way that you're going to get past this starting point, right? You're just going to be kind of in this circle of trying to find the next best thing. Let me try to find the next best thing. Let me try to find the next best thing. And it's a fruitless endeavor. Like, I'm telling you right now, just find a couple concepts, and this is what we're going to go over in this video, is find a couple concepts and study the hell out of them. You want to, really ride it till the wheels fall off. And then at that point, when you have a deeper understanding of the basics, then you can possibly go into the other areas and avenues of trying to possibly refine your system. But I think this is where a lot of traders get stuck. They don't know what to focus on because they're trying to find that one thing that will just click for them, and it may never come. Okay, and you're just going to waste tons of time, tons of energy, emotionally, and you might waste a lot of account capital going down that route. So let's dive into it. Like, what are my ICT essentials? And it's very basic, right? We have market structure. So basically, we're just trying to determine the trend, the institutional order flow. Are we making higher highs? Are we making lower highs? You can incorporate different time frames. We're going to start with the higher time frame, whatever that higher time frame is for you guys. You don't have to start with the one that I'm going to start with. All right, I'm starting on the weekly, then I'm going to the daily, and then I'm going to either 4 hour or 1 hour. And that's my short term. So going into your charts, understanding market structure, first of all, understanding what is even a swing point. What is a swing point, right? And I don't need to cover it in this, but a swing point is basically a 3-bar pattern where you have, for a high, you have a lower high on either side of that high. And then for a swing low, right, we have a higher low on either side of the low. All right. So market structure obviously is going to give us the overall trend. Which levels are being respected. Are these stop losses, are these specific levels being respected as the market is trending higher or lower? Or are we in a consolidation? Okay. So understanding market structure is going to be obviously point number one. Liquidity is the next point, is understanding what is the draw on liquidity. Okay. Is it high resistance or low resistance liquidity run? Again, I'm not going to go through everything in here. I'm just going to outline you guys how I was able to start studying and actually dial in and focus on these specific topics. Because if you don't have a study plan or a guideline on what you're following, you're just going to be completely lost. You're going to look at all these new videos that are popping up and you're not going to get anywhere. I'm telling you right now. You have to make sure that you're going to sit down and actually turn off all the noise and just sit down and study these concepts. Like, understand their ins and outs and how they move. Okay, how they move the markets. Calling out a liquidity level and watching it actually trade to that level. That's experience that a lot of people just don't get. They don't put the time in to understand that their back testing and forward testing has a long-term effect on their overall experience. If you're not properly journaling, you're not properly analyzing the charts and having the patience to see your analysis pan out, then you are lacking a ton of experience, or you're missing out on all that experience. So again, high versus low resistance liquidity runs, understanding what those are, and then equal highs or lows. It's very, very simple. Okay, so we have equal highs and lows. Maybe calling this market down here and then seeing it possibly trade up to that level. Okay, that's all we're really focused on, is liquidity, market structure, and then inefficiencies. So really, the market is only seeking liquidity or inefficiency. If you think about it, we only have buyers and sellers in the market. It's very, when you break everything down, right, we have pending orders in the market and then we have market orders. So that liquidity, that's all we have, is liquidity or inefficiency. So if the market moves too quickly away from a specific level, they're not filling a lot of those orders. So the market will need to rebalance, pick up those orders, and then continue to the next level of liquidity. Right, the market is only going to the level that's going to facilitate the most trade. Okay, so with inefficiency, we have fair value gaps, buy side imbalance, sell side imbalance, buy side imbalance, so BISI, SIBI, and then volume imbalances. Okay, and we will get more into, what do we do with all this? Okay, it's up to you guys to understand what these concepts are and actually go into your charts and study them. And I'll go through a couple examples of how I actually got my reps in, okay? Because you can't focus on one thing and then when you get to your charts, now you're focused on everything, okay? That's not the proper way to study. And I know there's many of you guys that get caught up in that. I got caught up in it as well. That's just from my personal experience. You have to have focus when you're studying. You have to understand what you're weak at, okay? And if I'm focused on everything all at once, I'm trying to multitask everything all at once, it's going to be really difficult and slow when it comes to my growth curve. All right. But once we learn all these concepts, we need loads of reps in the charts to build our narration and anticipatory skill set, which I'll go over in this next tree. So for the homework, we're going to analyze and mark up our charts for each specific technical concept on its own. Okay, don't do market structure and liquidity in the same chart. That's definitely not something that you want to do. You want to just sit down and focus for one session and only plot out different things. Okay, so I'm going to pull up the charts real quick. So we need at least 100 plus examples of screenshots. And this is something that I did for years on end. And let me just remove my drawings real quick and let's go to, I don't know, Euro. So if I was only going to study market structure, this is exactly what I would do. I would go in here and plot out my long-term lows and long-term highs. You know, and yes, this is going to be very boring. This is something that you guys are not going to want to do, but I'm telling you, this is going to be absolutely vital to how you guys read the markets. Because if you can't do it on previous price action, you have to be able to do this on the previous price action to understand the narrative, right? And then watching it form real time is going to build your anticipatory skill set. So we have two different things going on. Yes, this is all previous historic price action, but previous historic price action gives us the narrative. Okay, how do you have a narrative if you're trying to predict the future? All right, the previous price action is telling us the narrative. Then we have our intermediate term highs and lows. So in between the long-term high and low, right, we have intermediate term highs and lows. Now, you guys can abbreviate these, right? Like I'll typically use LTH for long-term high, LTL for long-term low, ITH for intermediate term high, ITL for intermediate term low. Right, and then inside there we have intermediate term highs. All right, so once we have our intermediate term and long-term highs, we can drop down into like our hourly and then plot out all of our short-term runs. Okay, so this is just giving you guys an idea of how I sat down and studied for the longest time. I'm not in here plotting, fair value gaps or whatever the case was. I just want you guys to understand that this is how I learned how to understand market structure. Was what dictated a long-term high, what dictated a long-term low, where would an intermediate term high or low form, right? What is this overall structure? And yes, this is like a wedge pattern. If you guys, think that normal technical analysis doesn't play a factor, it absolutely does. That's not what we're trading, but understanding that this is a stage of reaccumulation, right? That's kind of your flag pattern, right? And then for bearish flags, that's our redistribution. Okay, it's very, very simple things, but understanding that we're coming to the charts with a specific goal in mind. Understanding that we are only coming in here to learn market structure, and that's it. I'm literally doing this and printing this out, so I'm going to download this image, save it to my journal, and write notes in it. Okay, so I would literally do that for the longest time. And you can even do it with a line chart. Like line chart, I think is a great way to just see market structure visually, understanding market structure. Okay, so we have short-term lows in here. We have short-term highs. We're running out short-term highs here. We're putting in a lower high here. Running out short-term highs here. Right, this is our long-term high up here. Intermediate term low. So when we break that, we have market structure shift. And essentially, even if you wanted to do it on a line chart, you definitely could. All right, so we have breaks of structure. We this is what we're focused on, okay? We're not focused on fair value gaps. We don't care about going online trying to figure out what the next best thing is. This is mastery, right? You have to understand that these are all skill sets. If you only understand one skill set, you have a plethora of other skills that you have to learn. But we're not trying to learn everything all at once. So yes, I think everybody out there wants to learn how to trade in a very short period of time so they can come into the markets and just crush it. And it's not realistic, okay? Give yourself enough time to learn all these concepts. I think if you do this for the next 3 months, 3 months from now, you are going to be extremely happy with your results, okay? So market structure out of the way, and maybe to alternate. One day I'm going to focus on doing market structure. The next day I'm going to focus on doing something else. All right. And on, et cetera, et cetera. So we're coming to the charts with a plan, with an understanding that I only want to stay focused, hyper focused study on one specific concept at a time. Okay. So market structure. And then liquidity, understanding that liquidity is just a run on old lows or old highs, right? And they're going to offset their order at specific levels, okay? Let me turn my magnet off just so I can draw these out. So, again, even doing this, you're going to, kind of understand market structure, but this is essentially just liquidity, right? We're just plotting liquidity rates from previous price action, trying to understand, once we get above old highs, we might get a retracement because that's where they're going to rebalance. Okay, so once these orders are triggered, it's going to rebalance back into the range. They pick up more orders and then go and take out the previous high liquidity. All right. And I know some of you guys are probably going to click off this video and be like, oh, this guy's so boring. Well, this is how you get good at reading price. Is going in, plotting the highs and lows, and trying to understand the narrative behind the market. Okay, who's getting trapped on what side of the market? Where are they pairing their orders, right? Where are they accumulating? So offset accumulation. Where are they accumulating below lows? Okay. All right, so we're just going in, trying to find liquidity rates. Okay, so once I have my chart marked up, what am I going to do? I'm just going to download and save. Okay, and this is how you get reps in the market. All right, we're not focused on doing all these different things at once. Okay, we have to be able to understand the tool. And again, I didn't mention this, but this is about training your eyes, okay? It's really about training your eyes to see structure in the market. Because when I first came to the market, my eyes it just felt like the lens is blurry, okay? And then if you've ever had an eye exam, right, it's basically you're taking that lens and putting it over the market and being able to read what's in front of you. If you don't have the skill set, everything's going to look foreign to you. Okay, you have to be able to train your eyes to specific things before you can get a read on the market. All right, and that's part of getting a narrative skill set, which I will cover in the next couple minutes. But again, we are just coming in and sitting down and just finding liquidity rates. So being able to spot old highs and old lows, okay, and seeing how the market reacts to those specific levels, okay? So here we have equal highs, right, being ran out and trading away from it. So once that happens, right, we have somewhat of a narrative, okay? So seeing this from previous price action, okay, again, is going to build our narrative skill set. So, there's nothing wrong with being able to see things on hindsight. Okay, it's giving you information to where the market might go in the future. Okay, that's all it's doing. Is we're just plotting old highs and old lows and just seeing what the market does after we take out those old highs and old lows. Okay, very simple. So this is what my chart would look like if I was only studying liquidity rates. And I'm telling you, I would do this for months on end and just hours upon hours on end. Is just finding these levels of liquidity. That way, it's training your eyes to say, oh, I've seen that in the past. I think this level is going to get rated. Okay, now we have a higher probability of market trading to this specific level than the opposite direction. All right, so I would go in and save that. And then when we get to inefficiencies, right, you have to spot fair value gaps or volume imbalances. So if I was going to spend a session only trading or only trying to spot fair value gaps, that's literally all I would be doing, is getting my rectangle tool, wherever it is. Okay. I turn the weak magnet on and just studying fair value gaps, okay? And watching how price reacts at those specific fair value gaps when they get retested. All right, seeing how price maybe is bouncing around in here. We're kind of at equilibrium of the range. Okay, so this is building our narrative skill set. Again, just understanding, which fair value gaps are being respected. How does price respond around them? Sometimes we're running above them and running out of liquidity, but that's not the purpose of this. The purpose is to just come into the markets and just train our eyes to spot fair value gaps, all right, without using an indicator. Okay, there's indicators out there that will plot the fair value gaps for you, but that's not what we're trying to do here. Okay, we're trying to plot fair value gaps so we can train our eyes to see them, all right, without the need of an indicator. Okay, so if your eyes can't see that small fair value gap, then you just don't understand fair value gaps enough. There's plenty more. I'm not going to go through every single one of them, but this is basically this is all I would do for a very, very long time, is just finding fair value gaps and just constantly going through my charts, trying to plot them, just so when a new one would pop up, I'm not going to miss that opportunity, or I just understand that the market might be gearing up for a leg higher or lower, depending on how the market is responding at that fair value gap. Okay, so it's just quick, very, very simple, but this is really all you should be focusing on is liquidity rates, or liquidity pools, market structure, fair value gaps. Okay, those are the three tools that you should be focused on before you start adding more and more things to your trading system. Because if you don't know how to trade with just these three things, what makes you think you're going to be able to trade with 10 things or 11 things? You're trying to keep adding and adding and adding more things to your system, making more things convoluted, and it's just going to be overall a really poor process and a really poor outcome. I think you're going to have a really poor outcome just from, I guess, overcomplicating everything that you're doing. All right. So we have inverted fair value gaps here. Right. Building our narrative skill set. So once we have, all these fair value gaps marked out, extremely small one in here. All right. These are all basically training our eyes to spot the fair value gaps and then seeing how they react at those specific fair value gaps. Okay. There's a short-term fair value gap in here, running out this low. And then when you kind of start seeing these ones, then you're going to get more comfortable taking losses because there's not, we're not just coming in the markets and saying, this is a fair value gap, let me, bet the house on it, bet the farm on it. No, there is a probability of these failing, okay? As with any other system out in the world, okay? There's no system out there that can provide you a 100% strike rate. It's not possible. So this is essentially what I would be doing for my homework. Coming in, finding all the fair value gaps. Again, just one specific thing. All right. And I always relate this craft to professional sports. Okay. If we are going to relate it to any sport, right, we're going to relate it to basketball, where we have a skill set that we need to achieve, right? Let's just say that we're trying to play in the NBA. What kind of skill set do we possibly need to play in the NBA? We can't just have one skill, right? Like, what good does it do us as a talent, upcoming talent, if I only know how to shoot free throws? Nobody's gonna sign you to their team, right? We need to be able to do free throws, but what does it take to do free throws? It takes you going to the gym and shooting 1,000 free throws in a day. All right, it's the same thing when I'm trying to convey to you guys as a trader, getting these reps in, just studying one specific concept before you go on to the next one. Okay. And when you get proficient at it, then maybe we start going into, I don't know, dribbling. Right? And underneath dribbling, there's a laundry list of things that we can possibly figure out, right? We have, crossovers, all these different things that we can work on. And maybe we have, jump shots. Jump shots, you got like floaters, you got mid ranges, fadeaways. Like, there's so many different things that you can work on doing. But I hope you guys kind of understand the analogy that I'm trying to put out there is like, we need to be able to build a skill set. But if somebody's really bad at free throws, they're not going into the gym and just shooting jump shots, okay? In between free throws. They're going to the free throw line and only shooting free throws for hours on end. That's how you get good at something. If you want to get good at reading liquidity, you're only studying liquidity. If you want to get good at reading fair value gaps, you're only studying fair value gaps. We're not doing everything all at once. All right. And that's kind of where a lot of people get caught up, is they're trying to do everything all at once, or they're trying to add new things when they don't even understand the basic thing that they started out with. Okay. And maybe it's not exciting, but this is a reason why 90% of traders will fail, is they just don't have the capacity to stay focused for long periods of time. Right? And I'm trying to make things easy for you guys by providing this guide. Right? This is the easy way to learn ICT, is focusing on just a couple things and getting really, really good at them. Because if you just found a way to only understand fair value gaps, I guarantee you're going to be light years ahead of people that are jumping all over the place with no reason or motive behind what they're doing. All right. There's no magic pill to trading. All right. So once we are comfortable doing all these homework assignments, right, and we just are working on our skill set, we're gonna, what does this do for our trading? Okay. So past price action, again, it gives us the ability to narrate the market. And when it comes to narrative, it's understanding, which PD arrays are being respected. All right, but I'm not going to go into all the PD arrays, right? Because if you don't know how to trade liquidity, you don't even need to be looking at breakers, right? All right, because that's essentially what a breaker is made out of. It's a purge on liquidity and then a market structure shift. But if you don't know how to read the liquidity and you don't know how to read the market structure, how do you know what the breaker is, right? Because you need both. But I guess let me draw out, what a breaker is. I'm going to add a mind map here. In order to understand a breaker, right, we need to understand a liquidity raid, and we need to understand a market structure shift. All right. These two things I just noted over here. So if you don't know what you're looking for when it comes to a liquidity raid or a market structure shift, why are you even trying to study the breaker? Okay, these are like prerequisites. These are like 101 classes before you get to the 201, or mitigation, whatever it is. Those are all necessary pieces for you to understand those concepts. Okay, you don't just understand the breaker and not understand market structure. So again, the ability to narrate the market is, which PD arrays are being respected, old highs, old lows, et cetera, fair value gaps. It's telling us, that's information that we're gathering from the market on which direction it's most likely to go. All right. So that's past price action. When it comes to live price action, it's our ability to see them forming real time. But this is where the shortcut, there's no shortcut for this. Is live price action is we're taking our skill set and then we have to forward test it in time. Okay. You can do this while you're back testing or whatever, but it's the ability to predict the next move in the market and being confident with that. Okay. Is, studying fair value gaps is great when it comes to going back in time, but it's a whole different type of homework assignment to plot the fair value gaps happening real time and then seeing how they respond. Okay. So we need to have both. I don't think you can trade without both. Okay. There's tape reading and then there's narrative. And I think narrative is just as important as tape reading. Okay. Because if the narrative is telling you the market's going up, but you're trying to trade a, sell side imbalance, what is it really doing for you? You're reading the tape as this market is poised to go lower, but the rest of the narrative is telling you the market should go higher. All right. So this is just kind of like a overall guide on how I approached ICT concepts when I was struggling, because when I was in ICT's mentorship, he was just feeding you all these new different concepts and terms. And I guess it was really hard to get traction just because I felt so overwhelmed. So I highly recommend that you guys follow this guide, keep things simple, and just really hammer away at a couple different concepts before you get into all the other, technical, complex theories, because those are more of a refinement to your system. If you can understand these three things, you almost don't need anything else, okay? It's just, how are you reading the market? And then it comes down to risk management. So I hope you guys enjoyed this video and learn how to set yourselves up for the next few months to study the concepts and strategies I outlined. I encourage you all to go through your charts as a homework assignment to find 50 to 100 examples of the concepts outlined for your study journal so you can improve your trading. If you want to learn more and stay up to date for future videos, make sure you subscribe to the channel, leave a like, drop a comment, and I'll see you guys in the next video.